Well, I believe 2014 is going to be an important year. Europe-wide, economies are starting to recover, and the Dutch economy will probably follow that. And that means we need to talk about how that economic growth is going to be funded. And securitization is one of the tools for that. And traditionally, securitization in the Netherlands has been an important part of the funding of the banks. So with that turnaround in the economy, it could be an interesting year to really come together and talk again about how we move forward. The second reason why I think it's an important year is that there's a number of key regulations that are coming to fruition probably, if you like. And these are regulations that could have an impact on what this market's going to look like going forward. Basel III, Solvency II, and the retention rules under 122A have a real potential to shape and actually make or break this market. It's important for us to participate in conferences for a couple of reasons. First of all, it's a platform for us to share our credit opinions and our views on the Dutch securitization and the broader European securitization market. But secondly, it also provides a platform to go enter into a dialogue with market participants. So not only are we able to, in a one way, share our thoughts on credit risks and the related topics, but also are we able to get some input for our own analysis and our own views on the market. And a conference like this really is a good opportunity for that. Well, no doubt there will be lots of talk about RMBS. RMBS is the mainstay of the Dutch securitization market. Last year there were about 20 transactions done in the Netherlands, and I think all but one were RMBS, so there will be lots of talk about that. As I indicated earlier, I think it's important to have a dialogue and a conversation about the direction of the regulation and the impact that will have going forward. But interestingly, I think talking about the funding of the economic growth will be a positive thing to talk about. And we have seen over the past year that policymakers have become more supportive of using securitization as a tool to fund economic growth, and particularly as it comes to financing SMEs. And in the Netherlands, that's not traditionally been a subsector of securitization that's been very active, but in other countries in Europe it has been. So we'll be able to give some insight in the various SME markets and how they fund themselves, talk about what the credit risks are in these transactions, but also maybe talk about some of the hurdles why these transactions have not been done more recently and what could overcome those hurdles. Yeah, we have had probably the last 6 or 7 years mortgage performance across Europe has been deteriorating on the back of the economic headwinds. So we have some really interesting insights as to what the role of services actually has been and what their impact can be on the performance of mortgage portfolios. And particularly, I think for the Netherlands, with such really good mortgage performance traditionally, we've also seen some deterioration here. So servicing has become more important. And particularly over the past 2 years, we've seen that Dutch servicing has improved and advanced as well. So we'd like to give some insights in that. And we also again like to draw some comparisons, for example, with the UK, where the servicing market is quite advanced. So that's an area that I think has become more important, and over these past few years we've gained more insights in. Asking someone from a rating agency what the importance of ratings is obviously an interesting one. We believe, and we see the evidence, that ratings will continue to be important. They do provide an objective comparison measure of credit risk in transactions, so they will be there going forward for this market as well. But what has changed is that it's become more important and to really explain what is driving the ratings. So where are our assumptions coming from that we're making, and how do we stress them, etc., so that investors are actually able to break down what goes into the ratings and really understand the drivers. So that's something we've been putting a lot of focus on in our research and data analysis that we're putting out. So I don't think ratings themselves are getting less important, but I think the importance of what goes into the ratings is growing, and we like that. We think that's a good development.